This podcast is part of the Frederick Podcast Network. Learn more at listenfrederick.com.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor, Hummingbird Wealth Management, LLC, and Cambridge are not affiliated. Now sit back and relax and enjoy another episode of Be the Hummingbird. Here's your host, Laura Johnson.
Hello, and welcome to Be the Hummingbird, the podcast where we hope to educate so that you are motivated or inspired to do something different in your life or to improve upon your life, whatever that needs you might have. So what are we inspiring you and motivating and educating you to do? Well, it's just, you're going through life and you think things are fine and then things aren't fine. We're inspiring you and motivating and educating you to make sure that you're prepared for those not so fine moments maybe. But also if you're looking to better your life or just make some changes in your life, that's what we're hoping to do. So what's our topic for today? Our topic for today is insurance. Bum, 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 bum. Anytime I hear the word insurance, I'm like, seriously, get ready to snuggle up into a blanket and take a nap because this is going to be the most boring topic I've ever heard in my entire life. So I'm going to try to not make it boring. I'm not sure if you're going to be bored or not, but I will tell you this. You're going to be educated, right? So I am the owner of Hummingbird Wealth Management. I think I've made mention of that a couple of times. We don't do all of the insurances. The main insurance we focus on is life insurance. So most of my conversation today is going to be surrounding life insurance. But obviously there are other kinds of life insurances as well. So I'll touch in those. I tell people these things all the time. I have a knowledge and I'll take you to that level of knowledge. But once we get past my level of knowledge, that's when I'm going to tell you need to go speak with an expert. So what is insurance and why do you need it? Well, insurance is essentially some kind of safety net to protect you from something that may or may not happen, except for in the case of life insurance. We're 100% guaranteed we're going to die. So it's not a may or may not happen in that situation. But it protects you financially. So let's give it a quick example. Let's say you have a car and you get in a car accident and it costs, let's say, $10,000 to repair that car, the body damage on the car, the mechanical things that went wrong with that accident. I actually just had a friend of mine that in a recent ice storm, his vehicle got totaled because of his accident. But in that same incident, his insurance or the other person who was at fault, their insurance is going to pay for the repairs on the vehicle, or in his case, they're going to pay for a replacement of the vehicle. Now, obviously, in a replacement situation, you may not get what you paid for it, but you're going to get what it's worth. But that's what insurance is about, is making sure that you aren't negatively impacted by whatever situation that you might be in. So what are the key types of insurance? So as I mentioned, I'm going to spend more time on life insurance than I am on anything else. So there's kinds of insurance that are out there, things like health insurance, car insurance, which I already mentioned, homeowners insurance, or if you're not a homeowner, renter's insurance, life insurance, and disability insurance. There's also umbrella policies. I'm going to kind of touch on that as well. So health insurance, some of us are blessed enough to be employed by an employer that offers us some kind of health insurance plan. Most of our health insurance plans have some kind of premium that you pay for them, and there's a deductible that you meet, whether it's as an individual or as a family. There are these things called high deductible health plans, and I've been getting a lot of questions about these lately, so I thought I'd kind of share a little bit about that. What is a high deductible health plan? Well, a high deductible health plan, basically they lower your premiums because you're willing to take on some risk as far as the deductible of what you will pay out of pocket before the insurance company steps in and starts paying. Now, if you're the kind of individual, and this is a real general statement, but if you're the kind of individual that rarely sees a doctor, you might get sick once or twice every 12 to 24 months. And even then you're like, I don't want to go see a doctor. A high deductible health plan is for you. Now, if you're the kind of individual that has diabetes, a previous diagnosis with cancer, you've got heart issues, like you're on a regular first name basis with not just your doctor, but also the receptionist at your doctor's office, a high deductible health plan might not be better for you. So what are the benefits of a high deductible health plan? Well, like I said, you have lower premiums because you're taking on that risk of a higher deductible. The second benefit, you get to participate in this thing called an HSA. An HSA is a health savings account. So in 2025, you can contribute up to $4,300 for individuals into a health savings account. And it's more for a family. It's more if you're over the age of 55, but let's just use that $4,300. What's cool about that health savings account are two things. One is it reduces your taxable income for however much you contribute into it. And the second thing is you don't have to use it or lose it. So if at the end of the year you still have money in your health savings account because you haven't used it, it can constantly roll over from year to year. And that works really well with someone who's a good candidate for a high deductible health plan because they'll be saving that money year over year, probably not using it because they're not going to the doctors very often. And eventually, when they do get sick, they have the money to be able to pay for it that they've saved tax deferred and tax free at that point if they're using it for their medical care. So that's what health insurance is. It's basically protecting against you having to have some kind of medical care. So auto insurance, kind of already mentioned this. There's all different levels and coverages. This is out of my realm of expertise. But you can get coverage that just covers in case you get in an accident and you damage somebody else's vehicle. You can get coverage if somebody else hits you. You can get coverage if your vehicle is stolen. So car insurance is one of those things you really, really don't ever want to be in those situations. You don't want to get in an accident. You don't want your car to be stolen. But if you are, what kind of financial impact is that going to have on you if you didn't have insurance to cover replacing or repairing that vehicle? So that's really where that auto insurance comes in. Then there's homeowners and renters insurance, and these are similar but not the same. Renters insurance, a lot of renters don't even think about this, but when you're renting, let's say a home that is owned by an individual, say I own the home and Joe Smith is renting it from me, I'm required as the landlord to have insurance on that home to cover the home. I don't cover your belongings as my renter, but I'm covering the home. So in case of, fire or hail damage or, whatever might happen with my home, then that's what that's for. But as the owner of the home, if I have a storm where the roof goes off and a lot of rain comes in the house, my insurance is going to cover that. But if in that same storm, a renter has his laptop and his TV and whatever else he might have inside the home get damaged, that's to be covered by his insurance, which is the renter's insurance. So a little bit of different, some similarities. I will tell you this, you want to look at your homeowner's insurance. And I would say, every time you get a new policy renewal, take a look at it. Same thing with your car. And have a conversation with your broker, whoever's handling your insurance. Because house values, I've been living in our home since 2012, 13 years. The value of my home has gone up exponentially. The cost of building or repairing my home has gone up exponentially. So you want to make sure that your insurance coverage has gone up alongside the value of your home or the value of rebuilding your home. Life insurance, I'm going to come back to life insurance. I'm going to talk about disability insurance, and we can actually provide you both of these. So disability insurance, that's if you get injured, whether it be on the job or off the job, but you get injured and you're incapable of doing your job for a period of time, or maybe you're incapable of doing that job forever, but you might be able to do something else. And so a lot of people think, well, I just sit behind a desk and I play on a computer and answer the phone. I don't do anything that's going to put me in any physical impairment. My extracurricular activities are just hanging out with my buddies on the weekend. We might play tennis or golf or, sit around and do some wine tasting. So I'm not really a candidate for disability insurance. Am I? Well, yes. What you have to think about disability insurance is that no matter what your job is, there's this thing called life that happens. And so you might be over the weekend doing some yard work and decide to trim some tree limbs, and you're up in the tree cutting that limb and you fall out of the tree and you break your back. Now, you're able to walk, but you're sore as anything. And you're not able to sit at that desk for, 12 weeks, 24 weeks. And not sitting at that desk means you're also not able to work remotely. It's not even that you're not going into the office. You're not able to work remotely either. And your boss is like, dude, I can't pay you. You're not here. That's where disability insurance, the right disability insurance, is coming in. Now, you might think my example is extreme. Most disabilities that occur are the kind that I just described. You think you're doing what is called a quote unquote normal activity. And in that normal activity, you do something to hurt yourself. And so we all think of things like construction workers or, emergency electrical line pole workers or, first responders. They're the ones that need disability insurance. And absolutely they do. But so do people who are sitting behind a desk, clickety-clacketing on their computers and answering the telephones, because normal life can definitely happen. Now, the less risky your job, the less the premium is on your disability insurance. It's all related to what kind of lifestyle you have. It's all related to what kind of job you have, what kind of income you're trying to replace. But disability insurance is something that I definitely think that everybody needs. So now we're going to talk about life insurance. You are 6 times more likely to become disabled than you are to die. Because you know what? You're only going to die once. Well, at least as far as I know, you're only going to die once. I mean, they might bring you back, but die. That's what I'm talking about, die. So why do people get life insurance? And a lot of people think, oh, I don't need to get life insurance because I'm too young for that. And then I get other people who tell me, oh, I don't need life insurance because I'm too old for that. Life insurance serves many purposes. The primary purpose that a lot of people think of for life insurance is, if I die, are there people or things that are dependent on me and my income and my assets to survive after my death? And do I have enough assets to replace me financially? And if I don't, that's where life insurance can come into play. So I often give an example and a story. So I'll give you an example first. Someone who's in their 20s and 30s, just starting their career, maybe have a partner or a spouse, and they're starting their family, and, okay, we're going to buy a house, and we're going to buy a car, and we're just starting our savings for retirement. Those individuals need somewhere between 10 and 15 times their earnings or earnings potential. And there is a difference. Because if I'm earning $50,000 a year now, but because of the career I'm in, I will probably be making $150,000 in the next 5 years, you should probably base your life insurance on that $150,000. Where does the 10 to 15 times come in, and what's the difference between the two? Well, I've been doing what I do for over 30 years. I've been in the financial services industry even longer. And I've done enough Excel spreadsheets and penciled paper and software analysis to say 10 to 15 times is usually a good range for replacing income. And so, somebody who's making $100,000 a year needs anywhere between $1 million and $1.5 million, if that's their earnings potential. And the difference between those two is based upon dependency. Do you have dependents? How many dependents do you have? How old are your dependents? And what is it that you want to make sure is done for or given to your dependents when you pass away? So good example is, my son and my daughter-in-law, they have 2 kids. They're 2 months and 4 years old. And the 2 of them together earn similar dollar amounts. And both of them, if one of them were to pass away, it would financially impact the other one. And it would financially impact their kids. So they need somewhere closer to that 15 times their income versus someone who has no kids or kids that are older, like mine, and who are, hopefully a little more independent. So those are typically clients that are going to want to look at term policies. Term policies are exactly what they sound like. They last for a certain period of time. They could be anywhere from 5 years to, I think the longest I've seen is 40 years. Most people are in that 20 to 30 year range that they buy term policies for. And at the end of the term, most policies expire. They stop being around. Now, a lot of people don't like the feel of that. So what are other policy options that may have? And I have you listening to me right now and you're like, okay, well, I have no kids. My kids are grown. I don't have to worry about it. I don't have any debt on my mortgage. Why do I need a life insurance policy? So other options and other reasons for having life insurance policies really just is based on each individual situation. So I've had clients who've come to me, they're like, I want to make sure that no matter what, that my son or my daughter or this charity gets $100,000. No matter what I do with my assets in my lifetime, I want to make sure this particular entity or person gets a certain dollar amount. And that's where a permanent policy is going to be more advantageous. And permanent is just what it sounds like. You're going to pay premiums for the rest of your life. No matter how old you are when you die, that policy is going to be paid out. Another reason is to help with tax problems when you pass away. So when you pass away and you distribute your assets, or your assets are distributed to your beneficiaries, there may or may not, depending on where you are and what the tax laws are at the time, there may be some either inheritance tax implications or estate tax implications. And that's where insurance policies come in to helpful as well. So how do you know what insurance you need, and how do you know how much you need and when you should be getting it? Well, realistically, this is something where you have to turn to experts every once in a while. So whether it be the life insurance and disability insurance, you're going to want to talk to probably a financial planner, or if you're looking at your car insurance and your homeowner's insurance, you want to talk to, your property and casualty as P&C agents is what you're talking about there. I did skip over one, and that's the umbrella policy. It's called a personal liability umbrella policy, a PLUP. Everybody say that with me, PLUP. So a PLUP basically is saying, if somebody sues me, this liability policy is most likely something that is going to help to be paid on whatever they're suing me for. So I don't know if you guys notice, we live in a litigious society where, you're hearing about people suing McDonald's over hot coffee that burned them. And I'm not discounting that. Somebody legitimately got burned with their hot coffee. But those types of things are more commonplace than they used to be. Not recently, it's been almost 2 years now, I broke my arm. But I broke my arm at my friend's house, and in theory, it was her responsibility. Now, I did not sue my friend, but there are people who will, hey, I'm still friends with you. I know it wasn't your fault, but my medical bills need to be paid, so I'm going to sue you. Just don't take this personally. In those situations, a personal liability umbrella policy would be the money from which that lawsuit would have been paid. Now, I tripped over something, I broke my arm, I had surgery to the tune of about $15,000 in medical bills. I didn't lose work over it. So if I had sued her, it would just have been for the medical bills. And so that's where something like that comes in. And a lot of people say the same thing. They say about life insurance, well, I'm not going to worry about it, or car insurance. Oh, these things will never happen to me. It's usually when we're saying, oh, this will never happen to me, that's when it happens. So a couple of the myths about insurance, and I'm just going to read off a couple of these. I'm young and healthy. I do not need health insurance. Remember, even minor medical emergencies can turn out very expensive, and it's better to be prepared. A second myth about insurance is red cars are more expensive to insure. Insurance companies could care less what color your car is. Matter of fact, every time I add or subtract a car from my car insurance policy, they've never asked me what color my car is. More are looking at your driving record, the make of the vehicle, the age of the vehicle, and your driving history. Renter's insurance is unnecessary. Yeah, that's a big myth. I think I made that clear. I, as the landlord, am going to cover the house, but I'm not covering all your belongings. And if you've got computers and TVs and whatever else it is you might have in your apartment, you want to make sure those things are covered. And life insurance is for older people. Nope. Life insurance is for anybody who wants to protect their legacy or protect the individuals that they're leaving behind. So I hope you've enjoyed today's podcast. I hope you found the information and the topic to be educational, and hopefully on some level it's motivating you and inspiring you to do something better and to prepare yourself and prepare your family for their futures. This podcast has been brought to you by Listen Frederick, and as always, it's not goodbye, it's see you later.
Live radio, local podcasts, the Frederick Podcast Network at listenfrederick.com.